What's up, everyone? This is Eric with Theme Options Trading, and today we're going to discuss game theory in the stock market and talk about my free ebook which speaks to this topic. Let's talk about game theory. What is it? The textbook definition of game theory is the branch of mathematics concerned with the analysis of strategies for dealing with competitive situations where the outcome of a participant's choice of action depends critically on the actions of other participants. Game theory is something that isn't really discussed that much in the stock market, in my opinion. And if you can understand game theory and how it applies to the stock market and options trading, I wholeheartedly believe that that can take you to the next step in your trading career. I have a free ebook which I wrote to speak to this topic to just provide one example of how game theory applies in the market. The book is called The Stock Market Day Trading Game, Viewing the Stock Market from an Emotional Trading Lens. This ebook is about 30 pages. I tried really hard to keep it brief, but also make it extremely effective. And I'll post a link below so you can download that for free. So let's look at a practical example of game theory. Prisoner's dilemma. So you have two prisoners, prisoner A and prisoner B. They're both guilty of a crime. Prisoner A and B, they both have two options. They can either confess or they can deny. And each response has a different outcome, but this outcome is dependent on what the other party says. This is important. What if your prisoner A and prisoner B is your best friend? Is your best friend going to screw you over and get you in trouble, or is your best friend going to stick to their ground and say they didn't do it? But you have to keep in mind that your best friend, in this case prisoner B, is thinking the same thing that you're thinking about him. He's wondering if you're going to screw him over and confess or stick to your ground and say you didn't do it. This affects prisoner B's thinking because he knows that you're thinking about him, and this process continues. Game theory. So looking now at prisoner A. If prisoner A confesses and prisoner B denies, prisoner A is going to get rewarded. He's going to have to serve 1 year because he told the truth, but his best friend is going to get 5 years because he stuck to his ground. What happens if they both confess? Well, they both get 3 years. If prisoner B confesses and prisoner A denies, this scenario is just reversed. Prisoner A will get 5 years because prisoner A did not tell the truth, and prisoner B will get rewarded for telling the truth and only have to serve 1 year. But if they both deny the allegations, they get 2 years. What do? Game theory. There is a mathematical way to get to the optimal answer, and we're not going to get into that. The main point here is your thinking about the other party is going to affect his thinking, and his thinking of thinking about you is going to affect your thinking. You can get really complicated with going down this rabbit hole, but the main point is y'all are thinking about each other, and that is affecting the way you view and act upon something. This could not be more true for the stock market. And let's take a look at an example. From a very general perspective, you have two parties. There's a buyer and there's a seller. Not taking into consideration any other variables, what you are saying if you're the buyer is you're right and the seller's wrong. Very basic level. What leads you to believe that you're right? Almost more importantly, what leads the seller to come to the exact opposite conclusion as you and them be wrong? Is this going to affect the way you view the stock? If the answer is yes, then you're on the right track. If the answer is no, then you need to take this into consideration whenever you're trading. Let's look at potential scenarios of what would lead somebody to buy here and what would lead somebody to sell. We're going to assume that The buyer is buying to open a position, and the seller is selling to open the position. So not selling to close. They're both entering a position for the first time. Why would a buyer buy here? The buyer could have a strategy of a 50% reclaim of this dip. Okay. The seller could like to short strength. And the seller knows that 50% is typically a good entry and has defined risk. So the seller's defined risk hypothetically could be above this top, and the buyer's defined risk hypothetically could be below this bottom. While these single parties are important, the most important thing is the herd. Herd mentality. What is everyone thinking? What happens if everyone thinks the same thing? Well, most of the time, the exact opposite is going to happen because the sheep are the ones who always get screwed here. So we can go down the mindset of who is right. Is a buyer right or is a seller right? What if the seller sold to open because he knows that a lot of buyers will get trapped here? Well, yeah, he's thinking about the buyer here, but the better mindset is to view this from an unbiased lens. What is a potential reason for a buyer to buy at this peak? Is there more than one reason? Okay. What is a reason for a seller to short the stock here? Is there more than one reason? Yes or no? What is the majority doing? Is a majority stuck here most of the time? Yes. Why are they stuck here? And what happens if and when the trade moves against them? If you can view this from an unbiased lens, this gets you in the mindset of thinking of game theory in the markets. You have to understand that both parties can and will get screwed over, and you have to know what are the sheep thinking. And this should affect your trading. Hypothetically speaking, we know all the buyers have their risk set below here. Well, what happens if we break this level? We're going to dump. And this is something to add to your trading analysis. My book will discuss this exactly, game theory in the stock market. Thank you for listening. Please like this video, subscribe to my channel, and click the link below to visit my website and download this ebook for free. Until next time.